Hello and welcome. Today is Sunday, the 9th day of July 2017. Welcome. My name is Derek. Let's go over the Bitcoin charts, but there's really not much going on, so it's only going to be the Bitcoin chart in this example. I'm going to talk a little bit about Steemit after I am done the technical analysis. Now, I could show a daily time frame like this with a whole bunch of periods. Well, we're going back to 2012, so all of 13, 14, 15, and 16. That's about 1,500 days. That's way too many periods. Now the 18 average is like meaningless when you look at it within such. And if I wanted to show this much time frames, I'll just put like a monthly chart. So let's just see how many periods look the best. And for yourself, it's probably different for everyone. And sometimes you would just want to take a look at a few. And this one is no exception. In fact, this is a time you do want to see only a few periods. But let's just take a look at a little less. And I think this is still a little too many periods to show. You're probably better off, again, with like a weekly chart, if you want to span back to the last 3 years or so of data. Let's remove a few more days. And here you can now start to see the green and the red candles. You can also start to see the significance of the 18 average band. But for me, this is still too many periods for my liking. And in this example, this seems closer to how I like it, because I can definitely see the 18 average in coordination with price action very well. I can see each individual day really clearly and the entire trend as well. And while we're on this, I'll shrink it again a couple more times. Hang on, don't like doing it that thick of a line. Let's make it smaller. There we go. Uptrend line. It still hasn't been taken out. And this downtrend line, well, you could say, well, it's getting above it in here. Well, it hasn't had any breaks. That it still pretty much counts as resistance if it's not going to break higher from this point. We're still in that situation where the conjunction towards this neutrality move mode situation. Nice major uptrend, and then the sideways having several higher lows, thus a uptrend line, and then lower highs, thus a downtrend line. And it's going to be easier to look at the key highs, I think, with the less candles, but still easy enough. Several of these higher lows, and right now a couple lower highs, and it's got to get above this one to attempt to end this neutrality, because once it gets past this previous high, that's almost the equivalency of what I need of such like a break of a resistance line. I'm not really looking for a break of a downtrend line, but of what a major key level is. 28, that's the key level. Let's shorten this out again. And now having fewer periods makes it much easier to signify the green candles and the red candles, as well as the 18 average as well. And when we look at the size or the gap of each of these things, or how big and small it is, it's pretty small in here. Volatility was low. And what we're seeing is this line consistently in a downtrend. And now this one, since this point, is in an uptrend. Well, of course, this is getting smaller and smaller. So that's another point of that congestion phase within this type of movement. And when you have the situation of these sideways neutrality consolidation modes of any sort, this being one of a few different types that can do such, then usually it resolves itself to the path of least resistance, which of course is higher. And if it doesn't, you realize there's so many times markets have great gains and there's still further profit taking that is going to be had, which is why you look at these key levels on the if scenario. But at this stage, not even a single lower low has been placed in the market, and it's going to need several of them before it's going to start talking about, okay, maybe there's going to be a deep pullback, because it most certainly won't be breaking either of these two levels. That'll just put cautionary signs and further downwards move within this congestion band. Let's shorten out the time frame one final time. We can take a look at the band and how it's crunched in a little bit. And when you see these, I think this is way too few. You're definitely depriving yourself of information from before. However, it does make it easier to see the current price action as well as the more shorter term areas. That's about the one thing that I think it offers. If you do a chart like this, and I rarely do, I like to have longer term moving averages. So I got the 18, which I would keep, but then I might put some sort of 50 or 80 type moving average as well to give you some longer term perspective. Let's look at this on the weekly time frame. And this was a situation of 1, 2, 3, 4, 5, 6, 7, 8 consecutive periods up, 8 weeks up in a row. Well, really, it was 10 of 11 from this low under 1,900 to about 2,900, a little about 3x or so, and has now had all of this sideways consolidation because it was started with one decent red move or one red candle, but 3 now, as we can see, where each one is closing right around this 2,500 number. So that's just the neutrality point for where it's at. It isn't touching this 18 average, so it hasn't corrected deep enough or long enough sideways for me to state that it's had a good enough correction, although that doesn't mean it just can't explode from here. I've seen it happen on a few of these charts. It's just usually when these things take off, it's going to take off from this band. And in fact, in this one, it has done it every single time looking at it within this. But still, again, that doesn't necessarily mean that we can't have this thing have a green move up to here. Because if, for example, if say there was an update at this level here, and this was a green candle, that would be a bullish setup. And you'd be like, oh man, it didn't hit the 18. I really can't go in on it. No. It's having a correctionary move. But it also states within this indicator that it could be longer and it could be deeper, and it would not take away the bullish trend right now. The 18 average of lows on the weekly is like 1,900 or so as it's going to be rising. So therefore, any moves that you see even hit the 2,000 will support it within this correctionary move on the weekly time frame. Let's move this on to the monthly now. Now, I'm limited in data here. That's definitely a sign or an indicator that this is in its early pioneer days. It's also in its first millennium, and it's the year 2017. So yeah, it's a very new thing, and it's had massive moves going from a few dollars to a few dozens of dollars, a few dozens of them. Oh, to about 100, to about 1,000, and now it's just a couple and a half times higher than that 1,000 now. And it's had its long sideways correction. So here's a spot where it was months and months, a few years, going sideways. And since this liftoff, well, this 18 average, a little bit of support in here, nice up move. And then it comes down and nice up move, but this doesn't quite go down too much, nor does this down move. And well, this didn't lift off from the band. No, it didn't. So that's why I was saying on the daily chart, it can do it. And this still is in a situation of anyone's guess, but this thing is pretty strong to have. Good green candle up, just a regular green candle, huge, monstrous green candle, the biggest since this move here. That's the biggest one since for the month in percentage gain. And then you follow that amazing month with a bunch of diddling around at that area. Very, very strong. And to do it again, I mean, it's July 9th, and it's hardly 9 days in, and you can hardly see this month in here. But if it does a bunch of just stuff like that again, then that is a very bullish pattern. But when this thing does get going and you're breaking past the 3, it's now anyone's guess to how far this can go, because when these things break out and you're trading above this 18 average as such, and you've had just a little bit of correction, a little bit here, big move up, and now we've just had a little bit again. So it can be more for sure, but that's why you wait for the situation of, if you're looking for a quick in and out, for the play to go there. And obviously, if you're holding long term and you're looking for places to sell, I really can't help you on the way up, because it's going to be interesting, because I know whatever this green size candle is, it can definitely match it. So I guess I can help you. And when we look at the size of the moves, well, we can calculate some Fibonacci, because that's always fun to do. And just give me a quick second here. Oops, okay. So we have the 1250 high, which is up here, and the 152 low. So I'm looking for an uptrend, which this is, and for it to have a good price correction, which this was, high divided by low to the exponent 1.618, multiply the low. Well, that's darn near 4,600. Pretty darn near good. 4,600. 45. 5,000. Now let's talk about piercing higher levels, because that's what these levels I talk about usually do on both the way up and the way down. So if I'm going through these numbers and my calculator says that this is a key number, in this case like 4,500 for the up target, then I'm going to guess it's going to be closer to 5, and it's more psychological as well. And if we're going to have a green candle like this, then that would make sense as well, to go to a situation of, okay, now what? Which really is what this is. It's your first breakout point from this level of resistance. You go up, now what? Okay, well, what it's doing is it's going sideways. So the choice is correction either through side or price. And obviously right now it's side, or continuation. But when you continue in an area where you're supposed to stop going higher, and you can say in this case it was, and it doesn't, oh baby, big up moves. Now that's the rarity. And of course it didn't happen here. But when you have the situation of more and more correction after a good move, then the more and more I'm starting to like it, and the more and more likely it's also ready to have its breakout from that point. All right, so that will be it for the technical analysis. For tomorrow, there's about an 80% chance that the 2.5 minute warning video will be out. I do have a busy day, and if I'm not able to get it done by 9:30, I'm not going to be able to do it, period. But most likely 80% chance that it will be. And as far as the Steemit is concerned, it's something I gave a shot a couple weeks back or so, and I wasn't too sure what to expect. And at first, I thought maybe it might have been something that I would like to get into doing on a regular basis. And as such, I've decided it is definitely not worth doing so, but something I would do very part-time, which would basically result in about a 2 to 3 post a month essay kind of deal. And the reason for that is because it's basically worth the time being money, and it is really not worth the extra amount of time that I can do at least doing these videos. I don't get paid the greatest, but I get paid okay for doing this content. So I figure, you know what? It's fun to do. I've been doing this type of stuff for quite some time. So, and the expectations for growth on this on the YouTube is very good. Now, someone mentioned about wanting to watch, not want to watch this on YouTube. I've from the SGT report where they got flagged for stupid reasons, and there's been so many cases where people have been nailed for one reason or another amongst the alternate community. And if you really do need to watch my videos and you don't want to use YouTube, my videos are automatically are available on BitChute, BITCHUTE. HUTE. You can see my videos there. They are saying the name is Money Charts there as well. But as far as posting on Steemit, it'll be just a 2 to 3 posts per month probably. I might just like put a report on like a dash here and there, or just something in an essay format, but not too often, unless of course I can see that it's something that I think might work. But unfortunately right now, I don't like the prospects of it on the shorter intermediate term time frame. So then, thank you for tuning in, and have yourself a great night. Bye-bye.